In Investing 101 today, how the economy is affecting investing. Mona Mahajan, the senior investment strategist at Edward Jones, is with us now. And what did you learn in your survey?
Yeah, thanks, Angie. And look, I think Americans have a lot on their plate right now from an investment perspective. We took the survey back in January when we were really coming out of the COVID crisis. And we learned that Americans were worried about many of the things you might expect: higher inflation, interest rates, employment, even those supply chain issues were front and center on the list of concerns. And of course, since then, we've had yet another crisis emerge through this Russia-Ukraine war, where we're again seeing higher oil prices and higher food prices broadly. And so, for us, I think Americans who are concerned, what we found through the survey is that they tend to make emotionally driven investment decisions. For better or for worse, you feel like you need to do something, whether it's buy or sell. And of course, over the long term, those emotionally driven decisions tend not to be optimal for your portfolios and to meet your long-term financial goals. But the good news is, what we did find is that those Americans that worked with a financial advisor or someone who could really provide some steady guidance, someone who's been through many cycles in the past, someone who perhaps understands your financial goals for the long term, your risk tolerances, et cetera. Those people tended to have steadier decisions. They thought about things like maybe rebalancing their portfolio, diversifying their portfolio, but they certainly weren't making as many impulsive decisions, and they certainly had their long-term goals in mind, and they wanted to meet or exceed those long-term goals. So we certainly found that that was the best strategy, especially during these periods of uncertainty and volatility.
What are your tips for making sound financial decisions that are not based on emotion?
Yeah, I think it's always important to, number one, take a step back and look at the broader picture. And for us, when we look at the American economy, especially versus other parts of the globe, like Europe, for example, American economy did come into this crisis on better footing. We had stronger consumer, we had stronger GDP growth, we had better employment and labor market statistics. And so that does help provide a little bit of cushion when we are undergoing a crisis. So it's always important to first step back and look at the broader picture. Number two, it's important to remember that market volatility is a natural part of the business cycle. You will have ups and downs, but longer term, again, investments tend to move higher at an average rate of perhaps 6 to 10%, depending on your risk tolerances and preferences. We'd also say that, generally when you think about long-term investing, you really have to start sooner rather than later. And so all those factors combined, we think, lend themselves to someone who's really interested in creating a long-term plan, and maybe creating a long-term plan with an advisor that can be with them through that period. EdwardJones.com is what we like to refer people to. We're certainly here to help, but happy to set anyone up with someone in their area, perhaps who knows, their specific strategies or goals, or who has worked with people similar to them. But someone up who can help you through this period, who can work with you, who's in your area, and hopefully will help you achieve or exceed your goals.
Go to businessfirstam.com for where to see our show on TV.